Hey everyone, it's Michael Waltos and welcome to the Orderflows market analysis for Tuesday, July 25th, 2017. Kind of a quiet day. It's first day of the FOMC meeting, so it's kind of expected to be quiet. Tomorrow, things should pick up as people get a better idea of what the Fed intends to do. Before we get started, brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So the tools I used in this presentation are the Orderflows Trader and the Delta Scalper. We recently re-released it. But we came out with an upgraded version of the Delta Scalper, and if you're interested in it and you are already a user of the Delta Scalper, send me an email to, don't send it to Mike at Orderflows, send it to upgrade@deltascalper.com. And then we can reply to you to get you the upgraded version of the Delta Scalper if you're already using it. Okay, if not, go to www.deltascalper.com to learn more about it. But anyway, let's jump into the markets today. Okay, so the first market we'll talk about today is the British pound. Now this is just the normal go-to trade I talk about every single day in these presentations. Is you have the divergence and you got the ratio afterwards. So you're rallying up, and you got the bearish divergence, you got the bearish ratio, and the market sells off over the next 3 bars. Before you come down here, you got the Delta Scalper giving a buy, which just sort of went sideways on you over the next 4 bars before failing and making new lows. Now, the other interesting thing about this high is, look at this, okay? Look at these deltas, small deltas, 38, 36, 22, 100, 15, 2, 11, 55. Then we make this move up here, minus 94, new high. Minus 108, new high, minus 90, new high, minus 435. So you got your strongest negative delta at the high of the day. That's a very bearish sign. Why do you have a high? Why do you have market rallying on negative delta? People say, how can that be? You're rallying, you should be having net positive delta. But delta works in 2 ways. One, it's the net. What it is the difference between the net aggressive buying and net aggressive selling. And when you're moving higher and you got negative delta, what it's telling you is this is the beauty of order flows. The market is telling you that you have supportive buying on this way up, not necessarily aggressive buying, right? You're going higher because people are buying, yes, but what you have also is strong supportive buying, passive buying here, 122. If you didn't, if this was a smaller number, if this was 30, you'd have maybe a small positive delta or a small negative delta. It could go either way. Here, you got 216. If this was 100, you'd have a positive delta. Here, minus 90. Yeah, you have aggressive buying up here to the top of this bar, 200, 100, 122. But look at this. Supportive buying here, 158, 160, 468, 141. If this was 268, you'd have a strong positive delta. It'd be 290. But it's minus 90. Why? Because you have supportive buying here. You had people selling into this bid. You had someone there bidding right at this level. But you had sellers selling into it, trying to call this the high, but they couldn't because the buyers were still there. The buyers were here. The buyers are here on this move up. Even here, look at this, 500, 497, 800, even above it, 474. But look at this grouping of 3 right here. You got strong negative delta, 435. So you're coming up here to this high. You still got this strong supportive buying. Yes, people are selling into it, but it's still there supporting the market. Okay, you finally make this new high. Start coming down. The supportive buying is, for whatever reason, I'll say it's overrun, but, we get past it. It's no longer there. And the selling is taken over now, and we make this move lower. So, that's how you can make a high on negative delta. Now, just really quick, I'll pull in this chart of the Delta Scalper since, Delta Scalper has been the hot topic recently. This is just a bar chart. I'm just showing you on the bar chart to make it easier for you to see. I could show you on the order flow chart, but I just want to show you. So, at 5 in the morning, you got a Delta Scalper giving you a buy, 130, I'll call it 40 area. What does it do? It rallies all the way up here. This is that high that I was just talking about, up to 131. That's the move. If you could just get one move a day, great. This is the one that failed. This one failed here. So you got basically what do you have? You have 3 trades today, and 2 losers, 1 winner. Can you accept these 2 little losers here? I mean, what's your risk? Your risk is basically 1 bar here, and then you get the winner here, which is 10 bars. Now, not every trade is going to be a 10-to-1 risk reward ratio, but this is what you're looking for with with the Delta Scalper. Okay, so this is a Japanese yen 15-minute chart on the footprints, and again, I'm not a big advocate of trading 15-minute charts with footprints. However, the information that you're looking at is still valid, right? I mean, you're still analyzing Delta the same way you would. I mean, Delta is is a piece of the order flow, right? When I say I don't like looking at footprint charts or 15-minute charts, because I like ratios, right? I like divergences, and you tend not to get, since it's just so much time and so much volume in a bar, that aspect of order flow on a 15-minute chart, on a 30-minute chart isn't going to be very useful. But when you're looking at Delta, which is again the net difference of aggressive buyers and aggressive sellers, it's very revealing. And that's why I like the Delta Scalper. That's why I develop tools like the Delta Scalper to help me, on charts that my traditional type of order flow analysis, isn't very powerful. Now people say, well, if it doesn't work on a 15-minute chart, what good is it? Well, order flow. Think about what order flow is, right? It's the orders coming into the market. And honestly, looking at a 15-minute chart, if a bar forms every 15 minutes, and if you're waiting for the bar to form, the flow that happened 14 minutes ago can be very important, but you're missing it because you're trading such a long-term chart. You're waiting for the bar to close. That's why I prefer to trade order flow on shorter-term charts. 4-range charts. I hate to say minute charts, but I do look at minute charts. There are certain things I do look for minute charts. But there's really the reality of it is, if you're trading the ticker tape, honestly, that's what order flow is. Trading a 15-minute chart is like trading with delayed quotes. I mean, that's my opinion. You could throw stones at me for what you will, but honestly, order flow is best applied with a shorter term chart, not a 15-minute chart, not a 30-minute chart. However, there are pieces of order flow, point of control, Delta, that can be very revealing on longer term charts. I mean, the same concepts will still apply, but for me, for my type of order flow analysis, I prefer shorter term charts. So here's Delta Scalper, gives a buy, next bar up, big bar up, another bar, new highs, right off the high. Delta Scalper gives a sell. What is that? 90-36 area, I don't know, 90-38, and it just drops. I mean, this is at 2 in the morning. People say, oh, it's 2 in the morning, not a lot of volume. 5 in the morning, you get Delta Scalper buy here. It goes up a little bit, not much. Comes down. So, probably would have stopped you out if you're still in that position. Then here, you got Delta Scalper giving you a nice sell. Next bar, big down bar from 90 even down to 90.84. Even goes lower. The next bar gets down here, down to 89.80, where you got a Delta Scalper buy that failed. Another Delta Scalper. This is 1 in the afternoon. Delta Scalper sell right before this big move down here from this 1 bar here from 76 down to 60. So can order flow be used on longer term charts, 15-minute charts? Yes, it can. Do the way I trade with the order flow? Does the way I trade with the order flow can that be applied to a 15-minute chart? Certain tools can. But not everything. I mean, if you're looking at order flow on a 1-minute chart, or a 30-second chart, but a 4-range chart, you're gonna have to look at it differently if you're trading a 15-minute chart, a 30-minute chart, because what you're looking for is changes in the order flow. Okay, so this is the Emini. This is a 4-range chart this morning, and it was basically straight up from the European session. We came in here at 1 a.m. Basically, you've got 24.68 and 3/4, 24.66 and 3/4, so a 3-point range. So even though you have something like a ratio and divergence, don't get too excited with any sort of signal when you're trading in such a tight range. You will get signals, but again, wait for the market to be moving before taking trades. If you're trading in a 3-point range in the S&Ps, that's nothing. Finally you got this breakout here, 4 a.m. You got a ratio and divergence. Yeah, it's at this point, you're trading 69 3/4. So it's a slightly bigger range. Can you take it? Yeah, you can make the argument that you could, but again, it's still in a tight range. Let the market have some expansion before you start trading it. I mean, what's the point of trading the market with such a tight range that it's just contained? Yeah, you can sell off from your high to your low, but it'll be 2 points, or and you'd be lucky to get a point out of that move. But anyway, yeah, if you took it, you got stopped out. But look what happens in the next bar. You got 3 imbalances, not stacked imbalance. We get so used to looking for stacked imbalances that sometimes we just overlook bars with multiple imbalances, even though they're just as important. And then you're breaking out to the new highs with a stacked imbalance, which is bullish as well. So, you got almost a stacked imbalance here, another stacked imbalance here as you go into new highs. Hey, at this point you should realize, hey, you got aggressive buying coming in here. Okay, so you make new highs, There's no reason to be getting short anywhere, selling it on this move. You come up here, you got a ratio and divergence. Now, now I'm fine. I'm thinking, hey, I could sell this thing. The only thing that's holding me back is it's 7:54. It's 30 minutes before the cash open. And I know once the cash open, everything is going to change. But anyway, there was, if you got short there, I thought about it. It came right back up, made a new high. Okay, yeah, I would have been stopped out. What? A point. Okay, fair enough. That's what trading is. You got to make decisions. You got to take trades. You got to take losses. If you don't take your losses, then if you don't take trades that lose, then you're not a real trader. But then you get up here to this high, new high, right on the cash open, divergence, almost a ratio. It's 0.74, but you don't have the ratio there. But the next bar, you've got the ratio. So you got the ratio and divergence. Again, I talk about this every day. These things appear almost daily, sometimes 2 or 3 times a day. This is very bearish, and what happens? The market sells off from this 76.5 area down to this area around 74, where it just sort of goes sideways, 74, 75. So you got a little bit of a move. It wasn't the greatest move. Okay, it's Fed day, so you got about a 2-point move there. Now again, you got in this bar here. If you're not convinced that hey, we're going to come off from this high, what do you got? You got 3 imbalances in the bar. Okay. Eventually you go down a little bit lower, down to 72.5. Delta Scalper gives this buy here. Now at this low, what do you have down here? You got point of control right at the low, bullish sign. You've got a ratio bounds low indicating some stopping volume, also a bullish sign. Next bar, you got the Delta Scalper giving a buy. So you got another bullish sign. Delta's expanding, 62, 917, 2800. And what happens is you make a move back up towards the highs. You don't take out the high immediately or anything like that, but you just started rallying over the next 1, 2, 3 bars. So again, it's a move from 74 back up to 76, 76.5. It's a 2-point move. Then eventually you make these new highs up here, 1110. What do you got? You've got, boom, you've got divergence. You got the negative delta on the high. You've got a ratio bounds low indicating stopping volume. So you got your divergence and your ratio. What happens? The market starts working its way back down. Notice to where you pull back when you get up to that high. You pull back right up to that point of control. This point of control is your resistance. And then you come off from 78 down to 76. It's another 2 points. Delta Scalper gave you a buy here at 1:52 in the afternoon. Didn't work. Just, yeah, it went up over the next bar, then failed and sold off. Stopped you out. Delta Scalper, coming into this close, although at this point, you 1 minute ahead of the cash close. The thing about the cash close, it's the time of the day that's going to have the most volume. So, you're going to get surges in Delta one way or the other. Personally, I'd steer clear of trading around the cash close just because of the sheer amount of volume coming in. You may get some, I don't want to say false readings, but, readings just due to the immense amount of flow coming in, because all the index funds are basing, their orders on the cash close. All right, so today in the room I had a question about how can you spot trend days, because on trend days you tend to get run over. On trend days there's 2 problems. One is getting run over, right? You take a position, then you get run over, and 2 is on a trend day, if you didn't identify it, you get out too soon. So it's more than one issue on trend days. Yeah, one, you're going to get stopped out a lot. if you're trying to buck the trend, and two is unless you have a way to recognize that you're in a trend day, how can you maximize the trend? Trend is your friend until it stops, right? But sometimes people don't realize that you're in a major trend, or maybe there's a strong trend developing, that the market is going to keep going in that direction, and and to get out a little bit early, and and as a trader, sometimes you kick yourself, right? They say, oh, I got out too early. If only I let it last another 2 minutes. There's times where I take profit, and then boom, literally 10 seconds later the market explodes in my direction. So I get out with 3 ticks, 4 ticks, 5 ticks in the bonds, and then okay, I'm there, patting myself on the back. Then I look at the screen, and then the market just screams up another 10 ticks almost immediately. I don't say it's disheartening. It's one of those things like, oh, if only. But honestly, if you stick to your trading plan, and that's what your target is, stick with it. Don't beat yourself over that. I mean, I knew guys that were trading crude oil. The guy runs his own fund, and he had all these options on when crude oil was trading over $100, and he was looking for a move below $100, and massive options positions on. And the guy, he closed out his position. He made like $300 million or something like that. But when all of a sudden all the dust settled down, he's like looking at it. He says, "Shit, yeah, and if I just held on to it, I could have made over $1 billion." But it's nice to look back and say, "Oh yeah, look at this chart, I could have made that." But honestly, if you have your trading plan written out, what your profit targets are, you shouldn't feel bad that you got out early. Although it does suck. I'll be the first to admit, it does suck. There's times where I do get out early, and then I just didn't feel right, in the trade, so I got out, and then literally almost immediately the market makes its move that I was waiting for. But one of the ways I like to look for a market that's trending, obviously, is you watch the delta. Right, negative delta overall is a sign of a market moving down. Strong positive delta, market moving up. But I'm always watching these things like these divergences. If I get groupings of them that fail, then I have a feeling that we're in a trending market, right? Because you get the little bit of buying coming in, you got the positive delta, but the selling, then watch the next bar, strong selling. So you got a positive delta of 1,000 here, you got a divergence. And then what happens next bar? Twice as much selling, 2,000. Here you got another one pop up. You got a positive delta, 1,300. Boom. What is that? About 140% more selling versus the previous bar. So then I watch the next. When we come down into low, what I'd like to see is imbalances. In 5 years, honestly, it's not easy to get as many imbalances as you would in some of these other markets, just because of the sheer amount of volume. But on normal markets, like I'll show you, I'll say normal markets, but other markets that move, that aren't so thick in depth of market, you'll tend to see imbalances. If it's really legitimate selling going into lows, or buying imbalances going into highs. So that's why when we came down into these lows, I was expecting the 5 years to make more new lows, and we did. From 30, we got into this area down here at 30 with very strong volume, and I was looking for this, seeing which way we're going to stay, on which side of it, and we just sort of traded around that area for the next hour. And then some more selling came in, and we did make a new low. But again, this low, there's no reason to be buying it. Yeah, you have a nice strong positive delta. Didn't build on it in the next bar, small delta. Actually, it looked encouraging. You had 2,000 positive delta, but it only ended up at 137. So it gave it all back. So even though it was positive, you had another 2,000 came in there and sold it back down, basically. So even though it's a positive delta, it does look negative. Come down in here, negative delta, strong negative delta with the imbalances. Then you get down here again, which I just finished talking about in the British pound, in the Eminis ratio. Divergence, no ratio. What do you got in the next bar? You got your ratio. So divergence and ratio. And then the next 3 bars you make a move up before you start coming back down. You got 3 in a row right here. Actually, you had a 3 in a row here. This was kind of confusing in the sense that you got 3 in a row bullish, 3 in a row bearish. But what can you do? I mean, this one's set up the way you like. I don't like when you get a ratio, at the turn, You know, you got ratio, then you got the bearish ratio. I don't like that. I'd prefer just a normal normal order flow. And then it just sort of fell out and came down. Then you got another 3 in a row, which didn't work out. Down here, 2 o'clock again is the cash close in the bonds. You got a stacked imbalance off the low. You got the delta scalper. You got a ratio. This one, again, you know, honestly, you shouldn't be trading bonds after 2 o'clock. I hate to say that you shouldn't be, but you know, that's when essentially the cash session closes. But again, you know, had you taken this, yeah, you would have been stopped out, you know, but you had a nice little winner here in earlier, you know, during the normal session. Okay, just really quick, this is soy meal. You know, not a lot of people trade the eggs. You know, honestly, most people trade E-minis, crude, and currencies or bonds. But you know, eggs are great markets. They follow order flow really well. You know, soy meal is a contract that's pretty near to my heart. But again, you know, the same things apply. Now look at this move down here. Okay, so here this bar, strong negative delta, 574, 360, 18. Selling is strong on the way down, but you know, it's kind of weakening, right? The delta, even though you got a stacked imbalance here, you know, it's strong here, 574. Then it's weakening, it's lightening up, 360. Then it's very weak, 18. It's kind of neutral. Down here, it's positive, 75. So it's changed, right? You got a couple things going on. You got the delta scalper. One, you got a divergence because you got positive delta, and you got a ratio. And you know what happens over the next couple of bars? The next bar just comes right down on you. You test the low. You get within a tick of the low here. Then you shoot back up. Test the low here again, and then you shoot back up. Now, you know, for those that aren't familiar with soy meal, it's $10 a tick. So you know, this is what, 328. So it's moved from 328 to 329 is $100. You know, so here you're risking, you know, getting long at 328. Your stops down here at 327. So you're risking 10 ticks. You know, you probably would have been able to squeeze out only about 10 ticks. Yeah, it got up to 329.5, but you know, honestly, I just would have been happy to get out up here, you know, break even to, you know, maybe 5 ticks. But again, it's the same thing. You know, yeah, it's not always the big monster move up, but sometimes it's just like that. I mean, you can only trade what the market's going to give you. Honestly, once you start testing the lows twice, that's probably not a very good sign. But you know, it's more of a market going sideways. But you know, you could have got something out of it. You could have got something out of it. But you're looking at the same things here, right? You're looking at the ratio and divergence, obviously delta scalper, but the same things apply to whether you're looking at grains or interest rates or crude oil or stock indexes. Okay, so next up, I'll talk about crude oil since we're talking about some commodity contracts, and there really wasn't much in the crude oil in terms of order flow on a pure order flow sense. I mean, yeah, I can talk about a few things, but keep it simple. I'll talk about the delta scalper here. So here at 3:49 in the morning, you know, if you're awake, you alerted to something, you know, 46.60 all the way up to new highs here, higher, and it just, you know, just makes this brilliant move up to all the way up to the, you know, the high here at 7 in the morning. You know, there's no reason to be getting short here. Yeah, you have a divergence here, but that's it. Then you get to this high, you got a divergence again. Here you got delta scalper giving a sell. What happens? The market just goes sideways, comes off a little bit, and then makes another run up. But really the big move, I mean, there's no reason to be really getting short up here. You know, I mean, the big move started early in the crude this morning. You know, you get up to this high here, you got point of control up near the top, but you know, again, that by itself is not a reason, but you're not really getting any strong reasons. I mean, people say, well, you got divergence, market came off. Okay, fair enough. You know, me personally, I like to get a little bit more than just a divergence. You know, then here, this is already 3:30 in the afternoon, so even though you had a big move up, you know, in the crude, you know, the sign was, you know, crude is a contract that, you know, really trades around the clock, and if you're trading it during the U.S. session, I didn't think there was any really strong things in the order flow. But, you know, sometimes that's how it is with the market. You know, you don't get what you want out of it. Okay, so anyway, thanks for watching this video. I don't want to keep it too long. It's already 25 minutes. To learn more about order flow, visit my website, orderflows.com. To learn more about the delta scalper, I'm going to create a separate video just on the delta scalper, just to go over some charts really quick. Again, I want to keep it separate than this one. I don't want to keep this one running too long. But you go to deltascalper.com. So thanks, everyone. Bye-bye.